Hello traders, Gary Wagner with the gold forecast. About 10:30 a.m. in Honolulu, Hawaii. It is the 9th day of February and this is the daily report. Gold currently trading quietly down about $2, 162, 163. Ask bid spread. We are looking at a weekly Henkin chart. And the reason that I'm bringing this up as our first chart of the day is that we have, for the first time, actually seen our average chart, in terms of the candle itself, go green. Now, of course, the average chart is always going to lag behind any of the indicators like Elliott Wave and the candlesticks that we use. Those tend to be more of a leading indicator, less of a lagging indicator. But the average charts, by filtering out the minute noise, the minor fluctuations, gives us a much clearer picture of the overall longer-term trend. And as you can see here, it is a very, very positive sign, at least as far as I'm concerned, that we do have this green candle forming. Before I get to the resistance that is obviously at hand, the fact that it ran to about the 1368 and began to stall, that being one of our Fibonacci numbers. Before we talk about that, I did want to show you a chart that I also found quite interesting, and that is that one pattern that I typically look for, the doji in a morning star formation, the Three River morning star formation. You can see that also forming in this weekly gold chart. Traders, we are looking at a 237-minute Henkin chart. This is a chart that I've typically used to look at our breakouts and look at the pennant formations that we've seen. What I am finding kind of interesting in this chart, we take a look. This is that down channel. This is the entire correction that we have experienced since, let's say, the last part of December. As you can see, this is Christmas right in here. Market moves up till about the end of the year, the 31st. This being our high right around 1421. And then, of course, we get this corrective ride down, running right within a channel, so to speak, forming its low here on the 28th. This is that 1308. We talked about a breakout here. We entered the market roughly in this area. The market then did, in fact, take off, traded sideways for a while, and then we talked about this breakout the other day, and of course, we did see a breakout, in fact, occur. However, as you can see right in here, we have really stalled. You can see that in terms of the range, the quietness of the market, it's absolutely lackluster. It is certainly right now waiting for direction. We did hit our first band of resistance. What I've done is I have put up our Elliott Wave count chart, but as you can see, I've created a quick Fibonacci retracement. This retracement is simply going from this particular top, and that's our record top at 1431, to the end of this. And as you can see, our resistance lines right in here, this first target area, we have absolutely butted up right against it. I talked about the fact yesterday that we wanted to see how the market's going to react in this area. And I think one of the best ways to illustrate the resistance that we are currently seeing right now, we are looking at a 60-minute Henkin chart once again, and I simply am putting in another Fibonacci retracement, only this time I'm not going from that record top at 1231, but the secondary top off the triple top to this bottom at 1308. And what I am finding interesting is here's the 50%. We're just right up at it. I think 68 was the high. The 50% is at 66. The next level is going to be 1379 and then 1396. My belief is that the market will stall at one of these areas, and at one of these areas will basically retrace a little bit and then begin to move back up. In other words, we will see the market run through its phases of zigzags. Now, In order to best protect ourselves, we currently have a stop. That stop is sitting at 1335, right in this area. I do recommend at this point that we move our stop up. My sentiment is we want to move it below this 38%. So my recommendation is to trail your stop to 1350. Trail your protective stop up to 1350. In this way, if the market is able to push through this particular area, and that's that 1366, currently trading around 1362 to 1363, I think that it will probably travel as high to the 79 area, and then we'll see if it finds itself with some resistance or is able to just simply trade over that and through that to the next level. In this way, by moving our stop up a little bit tighter, we will be locking in some profits. Of course, we are in at 38, and at the same time, give ourselves enough what I'll call wiggle room in terms of the normal trading range itself, so that if the market comes down a little bit, we still have the ability to stay in for a longer ride. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow for another daily report. Bye-bye.